What are your thoughts, as far as everything? There's a lot of activity happening out east as far as the Asian nations, Russia, the BRIC nations involving, purchasing large amounts of gold. What are your thoughts about that?
Well, so first of all, it needs to be said, all of those currencies, the BRIC currencies, are in collapse right now. They're in free fall. China, the yuan was the last to join the collapse party. The ruble, the Indian rupee, and the Brazilian real have been in collapse for considerably longer. But at this point, the Chinese yuan looks to be firmly in the middle of its own collapse. So, post 2009, when the U.S. economy really looked like it was going nowhere, a lot of people imbued a lot of hope for the world economy. These were the four countries that were going to stimulate their way out of it. Well, particularly China, they certainly did stimulate. They encouraged, their population to consume an enormous amount of capital and turn it into present economic activity. So they were buying enormous amounts of commodities, particularly from Australia, Brazil, and so forth. But now at this point, they're saddled with the debt, but they didn't use it to produce productive assets. They used it to produce things that weren't necessarily needed, such as empty cities. And so now these countries are in a great deal of trouble, and the people in these countries realize that, and they want to hold a form of money that isn't subject to sudden collapse. And so I think right now the beneficiary of that is the U.S. dollar. And so I think in getting back to the, let's call it less aware Americans, they're going to temporarily be right for all the wrong reasons. They're going to be saying, yeah, America, we're the best. And there could be quite a boom as the rest of the world is eager to pour its capital into the U.S. dollar. Yeah. The U.S. dollar is rising now, basically, as measured in all these different currencies. But it's just a capital consumption game. We're just consuming their capital now, and that may juice up, one hell of a boom here. But at the end of the day, the world is getting sicker and sicker. Mm-hmm. And I think people in other countries in the world are much more aware of it. So, for instance, in the German-speaking world, almost everybody has gold, as far as I can tell, and they're all very aware of it. Why? Well, they had hyperinflation in Germany still in living memory. It was the 1922. More importantly, they had hyperinflation in Austria in the 1950s. In the rest of the world, their currencies in some cases go up and down like yo-yos. Argentina, for example. And so, in a way, we're very fortunate in America. We've never had a currency collapse or that sort of crisis. And so Americans are much more trusted with the dollar than people are in the rest of the world, and much less aware of what can happen and what could likely happen. One of the ironies is even the gold bugs that say that their story for why you should buy gold, is the dollar is going to collapse imminently. And yet, what do they really want? They want to buy gold, wait for the price to go up, and sell it. Yeah. To get more of the very dollars they just earnestly told you a moment ago were going to be worthless. They want more of them.
Right.
And so, if the gold bugs don't understand the nature of this collapse, then how can we expect anybody else to right now? And so that's the challenge.
Right.
If there's a message you can send out to the world, that's it. It's the dollar is failing, and we don't see it in the form of rising prices yet. That will come at the end. But nevertheless, it's failing.
All right. Now, as we draw towards the end of our conversation, give me your, 5-10 year projection of what the Federal Reserve note here domestically, might purchase you or might look like to your everyday, common or average worker.
I think certainly in the short term, and I think in the intermediate term, purchasing power rises. Right, so I've done a lot of work, and I want to be, by way of full disclosure, my theories are not, certainly not mainstream, and not even mainstream amongst Austrian school. My theory, and I've written a theory of interest and prices, it's on my website, which is keithweinereconomics.com. It's a 7-part series of theory of interest and prices and paper currency, says that prices correlate not with money supply, but with the interest rate. We have a falling interest rate. That trend is not broken. That trend continues. And as the interest rate falls, that means prices will tend to be soft and getting softer. That's not necessarily a good thing, because what that means is demand is soft and profit margins are getting crushed. So this is again a process of everybody getting hurt, and the net result is prices are going down. It isn't really a good thing. People are celebrating right now. They see the price of gas at the pump is down, and it's good in a way, but actually it's tragic. And the destruction, the defaults, the layoffs, the bank haircuts, or more bank ballots, whatever is going to be the solution to that, is going to be a great deal of pain. So at the end of the day, of course, there's going to be hyperinflation when the dollar goes to zero. But the thing to really watch for that, and I write a lot about this topic, is permanent gold backwardation. So to make a long technical term really short, you should think of not the price of gold in terms of dollars, but think of the process of a live market where you have bid and ask. It's gold bidding on the dollar. And in times of stress or crisis, it's always the bid that goes away, never the ask. Suppose, for example, and I haven't said this, I want to be really clear, this is just a hypothetical, fictional example.
Right.
Suppose the U.S. Geological Survey said there's going to be an earthquake in Los Angeles, 15 on the Richter scale, nothing taller than a dollhouse will be left standing. Now, what would you expect to see in the real estate market in LA when that announcement came out? There would be no lack of offers to sell real estate. Some of them would be trying to hold out for full price. Some of them would be discounted a little bit. But there would certainly be a robust action and asks or offers to sell real estate.
Mm-hmm.
Bids? There wouldn't be a bid. There wouldn't be a bid probably from Santiago, Chile to Victoria, British Columbia, and probably as far east as the Mississippi River. There wouldn't be a bid on any real estate until the world is holding its breath, waiting for the earthquake. And then after the earthquake, the bid will come back in and perhaps at a much lower price. So it's the bid that disappears under crisis. It is the gold bid on the dollar that is in the process of withdrawing. It's sputtering. Mm-hmm. Imagine you're driving a car and the car is basically out of gas. It doesn't usually stop all at once. Like you get a little bit of motor power, and then maybe you start to go up a hill and the gas sort of sloshes to the back of the tank, and then there's but then the car levels out and then the motor starts again. Mm-hmm. But it takes a while to sort of die. And we're seeing that right now in the gold market. It's sputtering. Mm-hmm. When gold completes the process of withdrawing its bid, the first thing that the average observer isn't going to be watching the spreads between futures and spot, which really says they're just going to see the gold price rising, parabolically. Mm-hmm. But it's going to be due to this reason. The end result of that, and I wrote a paper that anybody can Google on, it's called When Gold Backwardation Becomes Permanent. Mm-hmm. And I talk about the process by which the price of everything will be driven to infinity, or until people say it's time to stick a fork in the dollar and be done with it, whichever occurs first. Mm-hmm. It isn't going to be due to quantity of money. It is not going to be consumers out competing one another with wheelbarrows full of cash. It's simply going to be the dollar is no longer working as a medium of exchange. That's what's coming, but I want to emphasize that's the end. Mm-hmm. Gold is not in permanent backwardation today. This is not today. This is years away yet. Mm-hmm. Several years at least, and who knows, maybe 5 or 10. It's very hard to put a time frame on these things. That's what's coming at the end of the day. Right now, it's just more economic malaise, more and more difficult to make a profit. Continued softness in the labor market. Unemployment may not go up because they gerrymander the unemployment statistic. Mm-hmm. Now you're not unemployed, you're not in the workforce.
Or not looking,
right? And so they can manipulate the statistic. But that, I see a continuation of that, booms and busts in the stock market, and continued capital destruction, perhaps punctuated by high visibility failures, blackouts, bridge collapses, train accidents, those sorts of things, because we're neglecting, when businesses' profit margins, airplane accidents, when businesses' profits margins are crushed, and there's no way to make a margin anymore, they have to neglect something in order to keep the lights on. And what they're going to neglect is preventative maintenance, capital upgrades, all the stuff in the back end of the business that nobody really sees. And so that's my prediction for the next, call it 5 years or so.